Okay, now that we've got these equity markets at all-time highs, there's a bit of volatility today, granted, but generally we've got all-time highs abound. We've got easy money policy that is being ushered in. Let's bring in Bala for a look at what this means for IPOs. He's the CEO of AIP Asset Management, which specializes in financing some of these companies that either are small cap public or hope to go public. What's the environment like right now?
Yeah, look, I think the environment's been the best we've seen in many, many years in terms of opportunity sets. And so, we've come off a background where, we've had that bear market for about a year and a half. And so now we're seeing, the semblance of a new bull run. So, we're seeing a broader environment where you're seeing a lot of good things happening. So we always take a look from a broad-based perspective of, where are we in a cycle, right? So if you look at the last 70 years in the North American markets, there's been, call it, 10 unique bull and bear cycles. Every cycle is about 7 years, roughly, right? It's usually a 2-year bear market followed by a 5-year bull.
Excuse me.
No problem. And so, if you look at where we are in that cycle, I think the end of the bear market's done. I think we're in the first year of a 5-year bull rally. And so, look, we're quite excited about, the market today, where we see the market's going. And, we think it's going to be a very exciting next few years.
We've seen a lot more go privates than go publics in Canada. Are we coming to the end of that? Because we've seen some of these tech companies in particular, as you know, that really fizzled after the pandemic.
Yep.
Opportunistic buyers come in, and we haven't really seen those IPOs,
right,
feeding the ducks, as it were. When could we see that shift?
Sure. I think that's part of market dynamics, right? So if you look at the broader picture again, right? So if you look at what happened over the last 20, 30 years, there's been this huge movement from money in the mutual fund market to ETFs. And ETFs predominantly favor larger cap companies, more stable companies. And so what you've seen is that bifurcation of the market where you've seen ETFs lead the charge on larger caps, and those are the companies that are public. A lot of the smaller caps are finding it very difficult to get financing. There aren't many mutual funds that actually invest in small or micro cap companies. And so what's the incentive for them to go public so quickly, right?
And that brings up a good point of the opportunities that you're seeing, because maybe gone is the era where they could get financing when interest rates move significantly lower. There was so much money chasing few ideas.
Right.
Now that we're moving into easing cycle,
right,
is it fair to say that that's still not the case, right? Just because we're getting lower interest rate, that doesn't mean that financing is going to get any easier for this class of company.
For this class of companies, you're right, especially with regards to equity financing, right? Because that market has slowed, right, as an industry has changed. But what we also have to notice is that, the amount of money that's going into private equity and VC is become this monster-sized market, right? So if you look at the pre-IPO markets today, it's a $3 trillion AUM business. It's got 1,200 unicorns. Those are companies, worth more than $1 billion. And so, if you put that in perspective, it's a stock market unto its own, right? It's the size of the TSX, 1,200 companies, more than $1 billion market cap each. And it's slightly smaller than the London Stock Exchange. So it's very significant as a market. And so because there's that funding vehicle there, I think companies can stay private for longer, get bigger, and then come out to the markets later.
Is that true in Canada as well?
I think so. Because at the end of the day, it's a global funding infrastructure that we have, right? And it's pretty easy to go across the border and say, hey, listen, I've got an amazing idea. Would you like to fund it, right?
Now, you've got this vehicle where you're giving access to pre-IPO companies, right?
Correct.
And you've got a basket of how many of them?
25.
What are some of the characteristics? What do you think is next to go? I feel, give me a list.
Yeah.
Nobody else is watching. You just tell me.
Tell me.
Yeah.
No, I think if you look at the pre-IPO market, what you want to look at is a couple of key indicators. So like I said, there's over 1,200 unicorns in the world. So, gone are the days where, I need to sit here and say, Amber, I'm a genius. I can build the next unicorn. You don't need me to do that. What you need me to do is figure out a couple of basic aspects, right? You need us to look at the markets and say, okay, well, what's going to drive this market in the next few years? And that, I think, is a very clear pull there, right? Which is US tech and AI stocks. Mm-hmm. That's the driving force. So now we have 1,200, we cut that by sector, right? The next one we look at is, who's too big to be private right now? right? Like who has way too many employees, way too many LPs, way too many investors that it just doesn't functionally make sense for you to live in a private world. And so that's the billion plus market cap. And all the way, they go as high as, call it 200 billion, right? In terms of sizing, right? And so you want to pick the ones that are nearer term, the ones that'll go public in the next 12 to 18 months, because that's where you get that initial pop that IPOs tend to run in that first few quarters, right? And then the third aspect you want to look at is, it's index inclusion, right? It's something we don't talk about and we don't think about.
But you're thinking about that as pre-IPO already.
Yeah, you want to pick the stock that you think is going to go public soon and will end up in an index. At least we'd have a very high conviction rate, right? And so indexing has this huge momentum boost because you get added to the NASDAQ 100. Every tracker, every index, every ETF is a forced purchaser of your stock. And that'll just cause the stock to rally, right?
I mean, a lot of this skews then to maybe US companies, US style investing. I ask again, where does that leave our Canadian, they're not unicorns, that narwhals?
No, look, I think they're part of that same bucket. I think they're part of that broader bucket. Obviously we don't have anything in that top end. We don't have anything that's, kind of 20 to 100 billion in market cap, but we've still got very significant companies. And so those companies will either get acquired or they'll go public via the same sort of route.
Is it true that the standards and the threshold for going public is still a lot higher than it was, say, in 2021?
Yeah, no, see, I think people focus more on the regulatory environment rather than the customer, right? It's the consumer that's decided, hey, I want to buy S&P 500 ETFs. I want NASDAQ exposure. I want the TSX 60. And it's got very little to do, I think, with the exchange or the regulator, right? At the end of the day, I think customers have made that choice. And I think, look, as industry participants, we need to start providing vehicles that make their job easier to allocate, to fund to basically invest the way they want to, right?
Well, yes and no, because the SPAC craze, don't you think that got a little out of hand? That burned some people. They were attaching celebrities to that. Alex Rodriguez, what business does he have telling me about a SPAC?
But this is North America. This is the way it's always been, right?
Yeah,
It's boom bust cycles. We've always done it this way. And look, ultimately, over the long run, we know it works, right?